Does your current premium finance company lock you into long-term agreements? That's because they don't want you talking to us. At IFS, we win your business the good old-fashioned way, with customer service. I know you don't always have to use a premium finance company, but when you do, you should use IFS. Cheers.
Hi there, and welcome to another episode of the Digital Insurance Point podcast. I'm your host, Tom Reed, and as always, I am joined by my colleagues, Steve Earle, Angry Steve, CEO of Cheap Insurance.
Hello.
Adam Mitchell, CEO of Mitchell & Whale.
Hello.
And Jeff Roy, CEO of Excalibur Insurance.
Welcome.
And today we are pleased to be joined by Bruce Rabik. Bruce, how you doing?
I'm very well, thank you.
Awesome. So, Bruce, in lieu of me introducing you, I'm going to pass the audio stick over to you and let you give us and our loyal cadre of viewers a little background on yourself. Over to you, Bruce.
Sure. Well, somehow I found myself to be kind of an old guy in the industry. Started as an underwriter, spent a few years as that, then went over to what really was the very first consolidator in the Canadian insurance industry, a company called Trivest, and we invested in brokers across Canada. Ended up in one of our investments in Calgary, did a big merger, had some issues there, did a bunch of years of consulting to brokers from literally Newfoundland to Vancouver Island. And then for the last 20 years, I've been the chief operating officer of Rogers Insurance, based right now in Calgary. So
I wouldn't mind getting a little background too about the CBN, the Canadian Broker Network, about founding that, how it started, your history of and why you started it too.
Sure. Well, through my career, I'd been involved in a number of broker groups, including, and these are names from the past, but 7+1 Group, INS, which was really the furthering evolution of the Trivest Broker Network. And what I looked at is we wanted to create the best broker group, broker network in Canada. And so we started with a few learnings from those other groups, including an insistence right from the start that we share financial statements. And that just cuts out a lot of the bullshit, right? So it allowed for some real cross learnings because we could compare. And it started as a really good just sharing network, best practices network. And, it evolved into something far, far more than that as of late, including, we work on acquisitions or investments together and planning with carriers.
So Bruce, can you give us some quick background on your firm? Like, where did Rogers come from? Where is it going? And where are you trying to take it?
Rogers Insurance started literally as a one-man firm by Peter Rogers in 1977. Through the last 20 years with organic growth and a whole bunch of acquisitions, we're now 500 staff, 500 million in premium, and we're in British Columbia, Alberta, and Ontario. We have a pretty good track record of a fair number of acquisitions. We're very active in the acquisition side of things. Within our CBN group, our network, there are some other CBN members that are active as well on acquisition. Synex Group, our partner out of Quebec, is quite active. They just did a private equity deal, which we followed very closely. Capri in British Columbia has been a little less active, but nonetheless has done some important acquisitions. So we're in an interesting place in that Rogers Insurance is very active about acquisitions, but we also have our CBN network partners where we share some information, and on occasion we've done joint acquisitions together. So that kind of gives us extra tools in the toolbox on the M&A side.
That's very unique. So I guess we'll start off with, why should a broker sell to Rogers? What's your elevator pitch aside from money? What value do you bring? And maybe you can talk about after that, what would a joint venture look like if you Rogers didn't do it and you used one of your other partners like Synex?
Well, I always like to start off the answer to that question in that, let's be clear. Most of the acquisitions being done out there right now are either being done by American brokers or brokers owned by insurance companies. There is very, very few true Canadian brokers left, and even fewer doing acquisitions. So Rogers Insurance is 100% Canadian, and I don't think people realize that those names that that are actively doing acquisitions. I mean, there's WFG and Brokerlink, which of course are owned by insurance companies, but almost all the other ones doing acquisitions are really effectively controlled by American private equity. So number one reason why you should do a deal with us is because we're Canadian. And somebody's going to say, do I care? They're going to give me a bunch of money. Well, if you care about your clients and you care about your staff, are you really going to leave them in the hands of a bunch of investors in Chicago? And I mentioned Chicago because that's where a lot of the private equity starts. They may say they're Canadian. They may say they're building the great Canadian broker. Make no mistake, they're absolutely controlled by American private equity, period. And, and if you know the nature of American private equity, their horizon is 3 to 4 years. Do you really want to sell your life's work, your clients, your staff to somebody who's has a timeline of 3 to 4 years? In other words, the private equity firm is only in that long, and then they need to flip it to give their investors back the money. And then, so that firm will be traded to a different private equity firm or a pension fund or whoever. It might be somebody with a very different agenda. So I like to start off there, but I've got lots of other answers. Rogers Insurance is the most award-winning top employer in the Canadian insurance industry, bar none. On the carrier side or the broker side, we've won something like 19 top employer awards, top SME employer, 50 SME employer in all of Canada and all industries, something like 4 or 5 times. Every year, top 75 employer in Alberta, once in a while, top 100 employer in Canada. So why? Because our culture and the way we treat staff is we work really hard at doing a first-rate job of that. The other reasons are, if you just want money, we've got money just like anybody else does. Another reason to do a deal with us, we don't come in with boilerplate structures. For example, we have been known to do minority interest deals, which virtually, again, none of our competitors will do, because that's one of the rules that private equity sets forth. They need to control your firm because then they need to extract the highest profit or EBITDA out of it. And part of that, again, is because they have a 3 to 4 year horizon, because we have a lot longer horizon, because we don't look at it that way. Perhaps we have a little less pressure to extract the highest level of profits, and our focus is more on organic growth. So I can go on, but if you're thinking of selling to anybody, you should at least talk to Rogers first.
That's a really clear pitch, and kudos for that sort of clarity for the listeners. Given the either company-owned brokerages or acquirers and or the private equity owned or inspired funded acquirers, many of them seem to buy anybody who puts their hand up on any size, and some of them have started to delineate a very commercial specialty or focus. What's the Rogers acquisition target broker? What does the target broker look like for size or geography or other makeup?
Again, we're a little bit flexible. So there's really a couple different kinds of acquisitions. There's the tuck-ins, so where we have an existing footprint. very happy to look at, smaller or even bigger brokers that we can consolidate into their, or if it's a minority interest, it can stand alone, but use the services that we have in that geographic footprint, backroom or brokering. We also love to do the bigger standalone office. So, for example, we acquired Meggs and Fitzpatrick in Victoria. That at the time they had about 100 staff. So, and we're still fairly big in personal lines. We recognize personal lines. There's lots of opportunity left. There's lots of opportunity in small commercial. So we're not just trying to build, another Aon Marsh Willis, which some of our competitors seem to aspire to. Like, we're still building the great Canadian brokerage that's actually reflects the whole economy: personal, small commercial, and big commercial.
So, Bruce, let's talk about brokers who've invested in some sort of digital strategy, whether that's an internal, best practices kind of strategy, or something external, lead gen, lead management, all that kind of good stuff. Do you find that those brokers are more attractive to you, and does that kind of implemented digital strategy, does that actually turn into a valuation boost for that particular prospect?
So I'm going to be real nervous answering that question because there's some really smart people on this panel. And they're going to feel free to correct me. So absolutely, in theory, somebody that's doing well in digital absolutely has enhanced their value. I guess the question is, there's a lot of noise out there, and I'm not speaking about anybody on this panel, of course, but we all know there's a couple of players out there who claim to be digital, who are just bleeding red ink and who are in trouble. And our mutual friend, if Sharif was here, he loves to list the litany of digital firms on both sides of the border that have just seen their valuations absolutely crash. So we have to distinguish, are you digital or are you successfully digital? And that's an important distinction. If you're successfully digital, this doesn't necessarily mean you're making piles of money. It means that you have a future pathway to profitability, that you've got some of the basics right. Absolutely, that's worth something. But if you're just mucking around in digital as a game, I think we can all think of a couple players out there right now. If they're mucking around and just bleeding the red ink with no prospect of future, I think those assets are almost becoming toxic right now, because it's way better to start from scratch than take over a legacy, so-called digital play that's kind of in a mess. So,
when you make an acquisition, what do you do with the former owners? Do you want them to go away? Do you bring them in and work them to the bone until they die? Do they get to hand the keys over to you? Do you do joint ventures? Talk about existing ownership and how that looks on an acquisition.
That's a great question. And I'm going to give you a muddled answer by saying it depends, because our learnings it can go either way. We've done some acquisitions where, the existing principal or principals have stayed in and it's gone really, really well. And we've done some deals where, we just loathed the day when we offered the existing principal an employment contract. I think the difference is, why are they selling and what's their view of their role in the future? If they buy into what you're trying to accomplish, into the vision, if they don't have the oversized ego where they just need to still be the boss, those are the kind of considerations that you really need to look at. If they're good guys or gals that want to continue and they see the advantages of being part of a more collaborative group or a bigger group, it can work beautifully. But sometimes it's just a disaster. And I'm not going to mention names, but there's a consolidator in Ontario right now. 3 presidents in 3 years overturned their executive leadership group 2 or 3 times in 3 years. I mean, it's just a revolving door. And, because they never had those conversations with the firms that they acquired, and they probably set unreasonable expectations. So it's, you got to be careful. That's all.
I know some of your firms you've purchased. I think I know the answer to this, but I'm really curious. Do you keep the name, or it depends if it's a tuck-in? You don't. It depends on the situation. I'm assuming it depends. What do you like? Again, some of the firms have built their names, but it all depends on the buyer, what they want done, right? So how do you figure out? Do you keep the name or not? How do you figure that out?
Yeah, a good question, and one where my answer will have changed over the years. We were able to get some learning from, let's call it, one of the big consolidators, because we hired one of their, sort of key staff away. Their learnings was, after a bunch of years of doing this, that the name of a brokerage was far more important to the former owner of the brokerage than it was to their clients. And the only thing that matters to clients is, Joe used to deal with me. Am I still dealing with Joe? Because I like Joe and I had some trust with Joe. I don't really care what's the name on Joe's business card. And I don't really want to go to the trouble of changing firms and signing a bunch of papers. I just know Joe was good. And if Joe or Jill is still handling my policies, the customer doesn't care very much about the branding. Now, that's been a real learning experience for us, because we bought some offices that we thought had really deep goodwill in the local communities, and we stuck with the names. And that's not a mistake. It's gone fine. What we just learned over time is the customer really didn't care that much. Again, it's because we kept all the staff and we kept the staff happy. Mooney Insurance in Red Deer was a great example. Fantastic footprint in a city of about 90,000 people, a high profile. We kept the name. We thought it was so terribly important. And then one day all the staff at Mooney Insurance came and said, could we just change the names to Rogers Insurance? Because all of our customers kind of know we're part of the Rogers Insurance Group and they don't really care. So it was actually the staff there who came to us and said, can we just get over this? And because we all think of ourselves as Rogers Insurance. So we said, okay, sure. And then, we just didn't lose any clients or anything. So
that's a really good segue into the next question of what's in it for the acquired teammates or employees.
I guess it depends on who's buying you. Our value proposition would be, by joining a larger group, you get some stability, you get better career options, you're going to end up with better training. We can provide better backup. So for example, we parachuted people from Calgary into smaller centers if suddenly they were short-staffed. A great example, our learning experience, and I think you guys know this story. I think we set the record in Canada for the most claims reported by any broker from one catastrophe, and that was the Fort McMurray fire. So we reported over 5,000 claims in a short period of time when our entire office in Fort McMurray was shut down and those staff went home to Nova Scotia, Newfoundland, Saskatchewan, whatever, because they were homeless themselves. And so all that claims had to go to the other offices. So we were able to get through that, keep those customers happy, so that when the staff in Fort McMurray were finally able to come back home, they weren't dealing with a mess. So there's a lot of advantages of being part of a bigger broker for that individual frontline person, but just being bigger isn't better. It's what you actually bring. And again, we're very proud of our culture, and one thing that we offer, which is totally unique in Canada, we have 158 employee shareholders. Every single employee in any operation that we have ownership in has the opportunity to buy shares in Rogers Insurance. And very importantly, the same class of shares as Bruce and Lee Rogers own. No BS about different classes of shares or different rights or anything like that. We're all equal as far as that goes, and every single employee has that opportunity. So they become owners.
I'm going to bring another party to the table here in terms of the carriers. So we all hear stories about what happens to certain carriers, some winners, some losers during acquisitions. What happens in your case? Are there winners and losers when it comes to the carrier side when you guys do an acquisition?
Yeah, I think that story's changing. I think 10 years ago, the carriers were the major source of financing for brokers buying brokers. And so there was absolutely winners and losers on that. Depending which carrier financed it, they were the winner because they would exert some sort of volume commitment or, cancel this portfolio. But as we've evolved, where private equity and, certain of the retail banks have become a little more cognizant that, lending money to brokers might be a good thing. Previously it's really been the exclusive territory of BMO, and now they're starting to get competitors there. So I think the nature is changing, and during COVID, all the carriers basically, except for Intact, basically exited the broker financing business. They're all coming back, but I think they just can't do the kind of lending that a retail bank or a private equity or so on and so forth can do. So it's more complicated. I think carriers want to be very close to this. I think they want to be in the lending business. Certain carriers partner very, very well with certain banks. Economical and BMO, for example, have a long track record. BMO works with a number of the carriers. So they can leverage off each other, and you can bring the advantage of both. And that way you don't have perhaps as many conditions on the financing, so on and so forth. So it's a tougher question to answer now than 10 years ago. I think there's still winners and losers, but it's a lot more complicated of a finance scene now.
So where do you see valuations going? Like how do you look at a brokerage and go, that's what that's worth, this is what that's worth? Like, are there things other than just a multiple of EBITDA or a multiple of commissions? What is it you're looking for? And where are multiples going?
So the big debate, are multiples too high? Do they have to go down? Could they even go higher? So we've tried to do a fair bit of research. We've had a lot of conversation with some of the big American consulting firms. We've flown the president of one of those big firms up to Canada about 3 times for some deep learning sessions. We've had discussions with, quite a few different people in the business of financing brokers. The point is, the multiples are not going down. Interest rates would have to go up a lot to start putting a damper on the frenzy that's happening right now. So I don't foresee that multiples will go down. Can they go higher? You guys have probably all read the headlines lately. Acrisure, valued currently at $23 billion. This is a firm that I forget how long they've been in. You guys might remember, but meeting Greg Williams, he didn't know a thing about insurance brokers. His neighbor across the fence told him about insurance brokering. He checked into it, and so, X number of years, he's built a firm that's been valued at $23 billion, and apparently at an outrageous multiple, of EBITDA. So that's, I think, where they're going. What do you look for in terms of that valuation? Well, everything's valued in theoretical on future earnings, right? So it depends on, what you project that asset is going to earn in the future. Is it sustainable? Do you have to risk adjust it? I think, and it goes in cycles about perception. So commercial lines was more valuable for a while, but then people started to realize, personal lines isn't going away, and it's actually pretty stable. There's some good asset value there. So between commercial and personal, and then small commercial, perceptions change, and perceptions will vary between the acquisitors. But when it really comes down to what's the future earnings, and does it have good people? And that's something we can't overlook. Is we all know talent is in shortage, and us, for one, we're willing to pay a premium for good people, period. So
besides good people, what else can brokers do to make their business worth more? Is it a factor of growth, Bruce? Do you look at, some people talk about the factor of 40 if your growth and your EBITDA is 40 or over. In some other industries, that's attractive. Is it strictly just improving your EBITDA? Is it improving your CPC? What can brokers do to make you more attractive to a buyer like yourself?
Well, I think a few basic things. Growth is more valuable than EBITDA at the margin, right? You have to have a certain EBITDA, or at least the potential to have a certain EBITDA for the future. But once you get past that, if you can grow, you're more valuable, or you have a track record of growing, you're more valuable than somebody who's just not growing and maybe has a decent EBITDA. Talent. And I know, Jeff, you said besides talent, but it's so terribly important. Again, if you have talented people in your firm, you're more valuable. If you have a bunch of people, if you've waited too long and all your key staff are now, I was going to try and pick on somebody, but I'm probably the oldest guy here. If you got a whole bunch of people my age, even though I'm not going to retire for a long time, you're not as valuable, because that's just a headache to try and go find all those good people. So if you have a bunch of mid-career talented people, you have a very, very valuable firm no matter where you are. Other than that, are your profits sustainable? Is everything in good shape? Although we're all interested in the work that Steve's doing on comparing productivity between different broker management systems and things, and can't wait for his conclusion someday. Are your processes in place? You're not using some wingnut broker management system that's going to be hard to convert. Your processes are solid, stable. Your E&O processes, nobody wants to buy an asset that's going to have 3 E&O claims the next 2 years. So, I can go on, but I think most brokers know what makes them valuable.
Where do you think the valuations compare in current days between the commercial lines and personal lines? You touched on it a bit. It used to be all the rage on commercial, and then the marketplace changing its eyes to the stability of personal. And how would you describe if there is a difference?
Well, I think something's worth what somebody's willing to pay. So different acquirers place a different value on different things. If you're a commercial mostly firm and you only want to buy more commercial, you're likely to pay a premium for commercial. If you're like us, a little more diversified, we would treat them relatively equal with some important caveats. Specialized commercial lines that are sustainable is at a premium, absolutely. Considered a premium asset. If you have a niche program or a specialty that's sustainable, you're going to see that people are going to be willing to pay a premium for that. On the other hand, if you had a very solid group personal lines program that ticks over and does a healthy profit, you're probably going to be able to garner a premium on that as well. So, most people are still going to say commercial is more valuable. I don't necessarily subscribe to that. I think it's really, you got to look at the specific asset, and personal lines can be very valuable too.
So talking about the things that make brokers more valuable, I want to spin that around a little bit and talk about things that might get in the way. And you talked about in bygone years, there was a lot of financing done by carriers. And in a lot of those cases, that came with a right of first refusal. Right? That was how the carrier protected its investment. A lot of those ROFRs are still out there today. So let's assume that you're looking at a prospect and they have a ROFR. Does that make you like back off? Does that diminish the value of the brokerage? How do you, what's your behavior when you see that your prospect has a right of first refusal in force?
I think in the last 10, 20, whatever years, it's been really interesting that our entire industry's just totally missed, and hasn't talked about a couple things. One is the current Americanization of the entire brokering industry. And nobody's even asking the question, is that important? Should we be worried? Should we talk about it? And the other one that's been around a lot longer is, Tom, exactly what you just said, is ROFRs. Talked to so many brokers who did a carrier financing deal and then went to do something. They said, I didn't understand this ROFR. I didn't realize what it really meant. If I could plead with brokers out there on one specific thing, I would say, don't sign a ROFR. Like, you don't need to sign a ROFR. It's just consider it. Absolutely, it diminishes the value of your broker. It restricts your future options. No matter what anybody says, it's the kiss of death. I've literally had a broker owner sob to me because they said, I have no choice. I wanted to sell to so-and-so. In that particular case, it was Rogers Insurance. And they said, I can't. And now my firm that I spent my entire life building is going to be folded into so-and-so, and literally sobbed because said, I just don't want that, and had no choice. But they didn't understand what they sold. Why aren't we doing great big billboards out there that say, do not sign a ROFR for your own good and protection? And by the way, you don't need to, because there's lots of other sources of financing. So you guys should be on a mission. Convince every broker in Canada, don't ever sign a ROFR.
We'll have to change our t-shirts to say no to portals and ROFRs.
Okay, so what's the end game for Rogers? You had mentioned, well, I'm not retiring anytime soon, but maybe you are at some point. But where's Rogers going in the future?
That's a hard question, and in a lot of ways the hardest question. So we talk a lot about scale, and what does scale mean? It does not just mean size or big for the sake of being big. We define it as meaning it gives us more and more capabilities to be able to service our clients and to give our staff the kind of career that we think would be top notch. So I don't know how big that is, but what I do know is it changes every day as our competitors get bigger, as customers get more sophisticated, as the industry gets more complex. We need to keep building capabilities. So what's the end game, Steve? I don't know. for sure. But what I do know is we're not setting up our firm to just sell out. We need to be opportunistic. We need to be entrepreneurial. We need to keep just on our toes and just keep looking out for what's over the horizon. And so far, that's worked pretty well. We think it'll continue to always work well because in the end, if we can make our customers happy, we should be able to win, no matter what size, no matter, you know, how evil our competitors are. You know, we can win if we keep our customers happy. And that's a pretty good feeling to create what we're calling a forever firm. You know, in other words, our firm in some shape or form, we're hoping will exist forever, that it will always be controlled by employees. And it just has to keep changing and being opportunistic. So, Steve, keep asking that question. Like 6 months from now, a year from now, I don't know if I'll have different answers, but that's my answer for right now.
The great Canadian award-winning forever firm with 150 owners that's done some deep learning and not smoking any roofers. I think that can summarize you up in one sentence, which, again, you're doing a lot of remarkable things. And one thing I just like to ask, just at the tail end here, is you maybe talk to our listeners about, you've made a lot of great purchases and done some great things through the Rogers vehicle, but you're one of the founders of CBN, Canadian Broker Network, and you've partnered with some of the other people and purchased some places together. Why did you find it more better to do a deal with one of the partners in CBN versus doing it through Rogers? What was your learning from that? And maybe share that with the listeners.
Sure. So CBN Group, we perpetuated one of our own members, Smith Petrie in Ottawa. The guys there were ready to retire. They wanted to sell out. They wouldn't sell to anybody but their CBN partners. Good opportunity, great firm, great city. Really, it just came down to, in that case, we all wanted to be partners there. So currently that's 3 CBN partners in there. Our good friend Sharif wanted to focus on Trufla, and so it was time for him to, let Sharp go on to a different kind of ownership. So we kept our minority interest in there, and one of our CBN partners, Synex out of Quebec, came and bought out Sharif. And again, it works really well. It means our partners in CBN, we're collaborating on different ways. We share intelligence. Now we're sharing equity in certain investments. We also collectively bought Southwestern Group a bunch of years ago. We owned it for 3 years, and then we sold it because we didn't see any particular advantage of owning that particular MGA at that particular time. That's a great story because none of us could have bought Southwestern Group on our own. It was kind of a big ticket, but together we could as CBN Group. We sold it 3 years later, and I'm just going to say we all made a very large profit out of that after fixing it up. And that shows you the benefit of collaboration. And so I often say to other brokers, other independent brokers, other Canadian brokers, you're not my enemy. My enemy is all those guys bringing their money across the border from the United States, or the brokerages owned by our carriers. You're not my enemy, and we should be collaborating and working to make each of us stronger. CBN is a great vehicle for that. I really encourage people to check out CBN because we are now looking for new members, or at least exploring that. But there's other networks, there's other ways. Collaboration between independent brokers, I think, is really a good ticket to success.
Bruce, thank you very much. Really appreciate your time. On behalf of the crew here, give a shout out to our sponsors, IFS Premium Finance, our premier sponsor, as well as the crew group and our charity partner, WIC. So thanks to those folks who help us bring this to a variety of channels, including YouTube and Spotify, and check us out there.
Is retention important to your brokerage? Of course it is. That's why at IFS, we have a cancellation prevention process. Want more details? Give us a call. I know you don't always use a premium finance company, but when you do, you should use IFS. Cheers.